In today's video, we're going to discuss the top 7 investments that can help you multiply your money fast. If you're looking to grow your wealth and achieve your financial goals, these investment options are worth considering. So, let's dive in. Investment 1: High-interest savings accounts. Starting off our list is a beginner-friendly option: high-interest savings accounts. While not necessarily an investment in the traditional sense, high-interest savings accounts can provide a safe and convenient way to park your money and earn interest. Look for online banks or credit unions that offer higher than average interest rates, which can help your money grow faster than a regular savings account. It's important to compare fees, minimum balance requirements, and other terms and conditions to make sure you're getting the best possible return on your savings. Investment 2: Index funds. Next up, we have index funds, which are a type of passive investment that provides diversification and long-term growth potential. Index funds are collections of stocks or bonds that track the performance of a specific market index, such as the S&P 500 or the Nasdaq 100. Index funds are designed to mimic the returns of the market as a whole, rather than trying to beat it by picking individual stocks or bonds. Index funds are ideal for beginners because they offer several benefits. They are diversified, meaning they hold hundreds or thousands of securities across different sectors and industries, reducing your risk of losing money if one company or sector performs poorly. They are low cost, meaning they charge very low fees or expenses compared to actively managed funds that have higher costs and often underperform the market. They are passive, meaning they require little or no maintenance or monitoring from you. You just buy them and hold them for the long term. You can buy index funds through a brokerage account or a retirement account. You can also choose between mutual funds and exchange-traded funds, ETFs. Mutual funds are pooled investments that trade once a day at the end of the market close. ETFs are traded like stocks throughout the day on an exchange. Both have their pros and cons, but generally speaking, ETFs tend to be more tax efficient and flexible than mutual funds. Some examples of popular index funds are Vanguard S&P 500 ETF, VO, which tracks the performance of the 500 largest U.S. companies. Vanguard Total Stock Market ETF, VTI, which tracks the performance of the entire U.S. stock market. Vanguard Total Bond Market ETF, BND, which tracks the performance of the entire U.S. bond market. Investment 3: Retirement accounts. Retirement accounts, such as 401(k), or IRAs, are another great investment option for beginners. These accounts offer tax advantages and are specifically designed for long-term retirement savings. Contributions to retirement accounts are made with pre-tax dollars, which can lower your taxable income and potentially reduce your current tax bill. Additionally, many employers offer matching contributions to your 401(k), which is essentially free money. It's important to take advantage of these employer matches and contribute as much as you can afford to maximize your retirement savings. Investment 4: Real estate and real estate investment trusts. Real estate can be a lucrative investment option for beginners who are willing to take on the responsibilities of property ownership. Real estate can provide both cash flow through rental income and potential appreciation in property value over time. There are various ways to invest in real estate, such as buying rental properties, investing in real estate investment trusts, REITs, or participating in crowdfunding platforms. However, it's important to thoroughly research the local market, understand the costs and risks associated with property ownership, and have a plan for managing and maintaining the property. REITs are companies that own and operate income-producing properties, such as apartments, offices, malls, hotels, and warehouses. REITs allow you to invest in real estate without having to buy or manage any physical property yourself. REITs are ideal for beginners because they offer several benefits. They are diversified, meaning they hold a variety of properties across different locations and sectors, reducing your risk of losing money if one property or market performs poorly. They are income generating, meaning they pay out most of their earnings as dividends to shareholders. REITs typically have higher dividend yields than stocks or bonds, providing you with a steady stream of income. They are liquid, meaning they trade like stocks on an exchange and can be bought or sold easily. You don't have to worry about finding a buyer or seller for your property or paying any commissions or fees. You can buy REITs through a brokerage account or a retirement account. You can also choose between equity REITs and mortgage REITs. Equity REITs own and operate properties and generate income from rents and capital appreciation. Mortgage REITs invest in mortgages and mortgage-backed securities and generate income from interest payments. Investment 5. Dividend stocks. Dividend stocks are another option for beginners looking to grow their money. These are stocks of companies that pay regular dividends to their shareholders. Dividend stocks can provide a source of passive income and potential for capital appreciation. Dividends are typically paid quarterly or annually, and they can be reinvested to buy more shares of the stock, compounding your returns over time. It's important to research and select dividend-paying companies with a track record of stable dividends and strong financials. Dividend stocks can be a good option for long-term investors who are looking for both income and potential for growth in their portfolio. Dividend stocks are ideal for beginners because they offer several benefits. They are rewarding, meaning they allow you to share in the success and profitability of the company and receive cash payments on a regular basis. They are resilient, meaning they tend to perform well even during market downturns and recessions, as dividend-paying companies are usually well-established and financially stable. They are growth-oriented, meaning they can also increase in value over time as the company grows and expands its business. You can buy dividend stocks through a brokerage account or a retirement account. You can also choose between individual stocks or funds that invest in a basket of dividend-paying companies. Investment 6. Bonds. Bonds are a type of fixed income investment that can offer stability and predictable returns. When you invest in bonds, you're essentially lending money to a company or government entity in exchange for interest payments over a set period of time. Bonds can be less risky compared to stocks as they offer a fixed interest rate and maturity date. They can provide a steady source of income and act as a cushion against market volatility. There are various types of bonds, such as government bonds, municipal bonds, and corporate bonds, each with its own risk and return profile. It's important to diversify your bond investments to spread out the risk and consider factors such as interest rates, credit ratings, and maturity dates when selecting bonds for your portfolio. Investment 7. Peer-to-peer lending. Last but not least, we have peer-to-peer lending as an alternative investment option for beginners. Peer-to-peer lending platforms connect borrowers and lenders directly, cutting out traditional financial institutions. As a lender, you can earn interest on your investment by lending money to borrowers who are seeking loans for various purposes, such as personal loans, small business loans, or real estate loans. However, it's important to carefully assess the creditworthiness of borrowers and diversify your loans to mitigate risk. Peer-to-peer lending can offer higher returns compared to traditional savings accounts or bonds, but it also comes with higher risks. And there you have it, our top 7 investments for beginners to help you multiply your money fast. Remember, investing always involves risks, and it's important to do your due diligence, diversify your investments, and consider your own risk tolerance and financial goals. It's always a good idea to consult with a qualified financial professional before making any investment decisions. We hope you found this video helpful in understanding different investment options and how they can potentially help you grow your wealth. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more informative content on personal finance and investing. Thanks for watching. Disclaimer: the information provided in this video is for educational purposes only and should not be construed as financial advice. Investing involves risks, and past performance is not indicative of future results. Please seek the advice of a qualified financial professional before making any investment decisions.